For the first time in months, the crypto markets are noticeably down. Bitcoin had a quick correction to just below $30,000, and Ethereum, which was hanging out around its previous all-time high, has given up a few $100s of gains. Sad as this may be, the dip isn't all bad news. Just 1 month ago, we were at $22,000, so BTC at $30,000 is still a pretty good deal. And to be honest, we were due for a pullback. At any rate, even if the prices are down a bit, the news is still pretty bullish.
Release the bulls!
BlackRock is getting into Bitcoin. A supposed double spend ended up being more FUD than reality, and crypto staking continues to be a popular way for crypto investors to make money. Make sure to smash those like and subscribe buttons and buckle up for this week's Exodus Crypto News. Welcome everybody, it's Friday, the 22nd day of January, and we're glad to have you along. The biggest news of the week is that BlackRock, one of the largest institutional investment firms in the world, has indicated that they're interested in trading Bitcoin. The investment firm has more than $7 trillion in assets under management, and their entrance into crypto would add another layer of legitimacy. Remember, it's not like BlackRock is some longtime fan of the orange coin. In 2018, Larry Fink, the CEO of BlackRock, said, and I quote, "I don't believe any client has sought out crypto exposure. Right now, I can tell you worldwide, I have not heard from one client who said, I need to be in this." How times change. From skeptical in 2018 to buying Bitcoin futures in 2021. That's the plan anyways, as BlackRock has mentioned that they'll be getting exposure to BTC via the futures market. That's a good start, but if BlackRock's ultimate goal is to protect the purchasing power of their clients' funds, maybe they'll start buying BTC later in the year. We'll keep an eye on it and let you know as the story develops. Speaking of developing stories, recently there has been some FUD about a potential double spend on the Bitcoin network. A double spend would be a flaw in which a single coin could be spent more than once. For example, I have only one Bitcoin in my wallet, but somehow I'm able to send that one coin twice as if I had two coins. Now, as we've come to expect, Bitcoin critics were quick to pronounce the death of the network. However, there's a lot more to this story than the critics would have you believe. It's true that a duplicate set of coins from the same wallet ended up in two different blocks. However, that doesn't mean a double spend took place. Only one of those blocks was accepted as valid by the Bitcoin network, and the other block was discarded. Now, the technical details here are beyond the scope of this video to explain. However, this block reorganization is a fairly normal occurrence with Bitcoin and no cause for alarm. The fact that so many people found it FUD-worthy is probably a good indication that there are a lot of new Bitcoin investors who don't understand how the network works, and added to the quick drawback of the BTC price. As we've already alluded to, Ethereum finally broke its previous all-time high on January 19th of this year. ETH hit $1,432. That's a new record. Ethereans everywhere have been waiting for this to happen for about 3 years, especially since Bitcoin more than doubled its previous all-time high at one point. This price growth comes on the back of an expanding DeFi ecosystem and last year's rollout of staking. Even though the first stage of ETH 2.0 launched just a few months ago, there are already about 2% of all Ether in existence being staked. That's really good to see. And once staking withdrawals are enabled, we'll probably see the amount of staked ETH really take off. Click the little banner right here for more information about Ethereum staking on the Exodus blog. So besides Ethereum, there are lots of different cryptocurrencies that support staking. In fact, 2020 was a great year for earning a passive income with staking. The cryptocurrency infrastructure firm Staked has estimated that investors earned more than $20 billion in rewards for staking in 2020. That's a fairly significant return once you consider that for much March of 2020, the total crypto market cap was only about $300 billion. That means that staking earned about 8% of the total crypto market cap last year. Furthermore, Staked has predicted that 2021 is going to be even better for proof-of-stake cryptocurrencies. 25% of the top 100 most valuable cryptocurrencies are all using a proof-of-stake consensus mechanism. As crypto prices increase, the returns that investors can get by staking coins in these networks will also grow. So why is staking so popular? Well, for one thing, many people consider staking to be more energy efficient than the mining process Bitcoin uses. Mining requires a lot of energy to power, whereas staking just requires a laptop and a reliable internet connection. Another factor is that it's easier to stake than mine. Investors can buy some crypto, like Ethereum, and start staking on that same day. The final factor is that staking can offer a really good return. Staked has estimated that the average return for staking is about 11.2% per year. And that's a great return, especially when you consider how few opportunities there are to earn a good return in the traditional markets. So crypto continues to grow, whether it's BlackRock getting into the Bitcoin game or Ethereum breaking its previous all-time high. Blockchain technology is showing the world what it's got. Wherever you are, whether it's Barcelona, Budapest, or Boston, we hope you have a great weekend and keep stacking those sats. Until next time, hold on.